Inflation or stagflation. After last week's weakness seen in the PMI and some other data, and finally with the NFP surprise in the US, a week ahead will be about inflation and last guesses about the recession. Central banks for their new decisions will focus on CPI numbers. While inflation also increasing, again this question is back to the investor's mind. Should we wait for growing inflation or stagflation? Let's review the most important events and data in the week ahead with me, Ahura, and IFCM markets. Number 1, non-farm productivity. While there are contradictory signs about the recession getting more and more, at least we all agree on the economic slowdown. With 1.2 million newly created jobs in the second quarter, business value declined by 2.1%. And now, non-farm productivity is estimated to decline at a 5% pace in the second quarter. While productivity growth has worsened compared to the before COVID-19 pandemic, many economists based on this data conclude that recession is already undeniable. These data would have a negative impact on the US stock markets. Number 2, EIA short-term energy outlook. The short-term energy outlook, known as STEO, published monthly by US Energy Information Administration, will provide depth market analysis of crude oil, petroleum products, and natural gas market. For now, estimates about the demand and supply considering the possible recession are what energy market activists would like to learn. The market reaction depends on the report itself and its detailed numbers. Number 3, US inflation. Inflation numbers in the United States will be the main focus of the week, especially with the surprising employment data. Now, market participants will watch it more closely. If inflation decreases as it showed in the previous weeks, then we should not expect an aggressive reaction from Federal Reserve and vice versa. With easing energy prices, CPI is expected to decline to 8.7% from 9.1% in the previous month. However, core CPI numbers also should decrease to say that there are compelling evidences that inflation is moving back towards Federal Reserve target. Lower inflation will put more pressure on the US dollar value, and increasing signs will increase the US dollar demand. Number 4, OPEC monthly report. After Tuesday's EIA report and weekly oil inventory numbers this week, we have to watch the OPEC monthly oil market report. In the OPEC report, the organization's outlook for the crude oil market developments for the coming year, a detailed analysis of key developments impacting the oil market and its estimates about the overall production and supply will be in the spotlight. Number 5, UK GDP. Last week, BOE raised the interest rates by 50 basis points and increased the inflation estimates to 13.3% from previous 11%. With such a huge inflation, nominal GDP may not fall that much in the second quarter, but real GDP is supposed to confirm the technical recession in the 5th biggest world economy. At the moment, and according to the latest analysis, full year 2022 GDP is expected to rise by 3.5%, but for 2023, we expect the economy to contract very slightly by 0.1%. Estimated numbers should have a negative impact on the sterling. Thanks for watching this video and hope this week is going to be an amazing week for all of you.